Now let's get it started on this side. This three-part discussion, starting with the global picture of how much and how effective the various actions by the World Bank and the IMF had been a year on. Joining me on the show for this is Bukar Kyari, a former chairman of the Nigeria Economic Summit Group and the current chairman of Suno Assurances PLC. Good evening, sir, and we thank you for making it on the show tonight.
Good evening, Boston. Good evening.
Thank you very much. We appreciate your time. Let's get started. It's a very lengthy conversation, but we broke it down into three. So let's take the global look of things. The analytical chapters of the latest World Economic Outlook report, which will be released tomorrow morning by the World Bank, find that COVID-19 recession has 3 times more impact on the global output in half the time than the global financial crisis of 2008 and 2009. Do you agree with that finding?
Totally and completely. The fact of the matter is all other financial crises that the world had faced is either contained into some economies or at best it's limited to one country, and then the spillover effect is felt across various economies. Now, the global pandemic actually started as a health crisis, but quickly metamorphosed into a global economic crisis because it affected trade routes, it affected logistical arms, and therefore it affected each and every country on earth. And the effect usually had a delayed effect. And that's what we are feeling at the moment. Even though in the developed economies, there had been a lot of ways and means, a lot of injection of liquidity into their economies. For the least developed countries and developing economies who are already overstretched, it became a major catastrophic event. So the conclusions derived from that report that was released today is basically a further validation of what most analysts had felt about the effect of the pandemic, which of course naturally started as a health crisis. But today we are having the effects. Therefore, it has the geopolitical impact, it had the economic crisis, and social and political effects are also being felt all over the world, because there are crises on every continent as we speak, that when you peel the onion, it actually had to do with what happened early last year.
Okay, so
and of course, what happened? Yeah.
Yes, sorry, Kyari Bukar, look at that statement from the United Nations Under Secretary General for Humanitarian Affairs when he wrote in the Financial Times, Mark Lowcock, he says, IMF spring meetings lack ambition for a world in crisis. We just showed that earlier, just as we started, as part of the introduction to this conversation. Do you think that the World Bank IMF meetings need some form of rejigging in view of the virus and the current global dynamics?
In fact, I totally agree with Lowcock's position, especially where it comes to the expectation from the rest of the world about what IMF, World Bank could do, especially to developing economies. Even though, technically speaking, some parts of Africa did not quite feel the impact of the pandemic as other parts of the world, the economic dislocation that it had brought on is palpably harsh, and it has actually an underlying longer-term effect down the road. I mean, bring it to sub-Saharan Africa. I think there are places where the effect was much felt rather than others. The places where this is going to be a very short or medium-term negative effect are probably the places that are not mineral dependent, i.e. they're not oil or commodity oil-dependent economies. But for the oil-dependent economies such as Angola, Nigeria, and the like, the effect is actually far pronounced. and therefore there has to be some level of what I would call liquidity injection into those economies.
Yes.
And I also agree with Lowcock's postulation that we should even look at either delaying the payments of debts, but I would even venture to go further and bring in what the new WTO Secretary General, the Director General mentioned, which is basically outright debt forgiveness for some of the emerging markets.
Okay, so in terms of some of, you talk about the funding, for example, but Lowcock, for example, was saying there's a need for the public and for these institutions and the wealthy nations to publicly commit, publicly commit, not behind closed doors, behind some very nice, or on Zoom, whatever, but to publicly commit to raise the scale, the scope, and the duration of financial flows for the next 5 years. Do you think the World Bank and the IMF has what it takes, and the wealthy nations? By some reports, the wealthy have gotten a lot wealthier during the pandemic, and the poor had actually gotten poorer around the world.
Correct. I mean, that effect on the market, generally speaking, about the wealthy individuals versus not so wealthy, and the impact on this economic dislocation that was brought forth by the pandemic, is also, there is a direct correlation to wealthier nations versus the non-so-wealthy nations or the poorer nations. And I think the effect of what Lowcock is saying, and also what I am postulating here, is that there has to be a commitment, not only of saying what we're going to do, but what they ought to actually do. There is a moral obligation of trying to do something that is what I would call a major bang of an injection of liquidity to the entire global economy. I mean, if you take, for example, the G7 nations, if they were to commit, say, 10% of the liquidity injections they have done so far into emerging economies as shareholders of those two institutions, then I think the rest of the world would all be lifted by the tide. Now, the impact of these is for the entire global economy to recover faster than if nothing were done. If nothing were done, we would probably see the global economy growing at what the IMF had predicted earlier on, but we may even see some dislocations, and therefore the growth will be concentrated in certain parts of the world rather than rising all boats, so to speak. So essentially what we need is a commitment that is going to be perceived by the rest of the world as, you know, we are in this together, all of us, and we need to actually rise out of this by helping the ones that are left further behind in the last 12 months or so.
Okay, just a quick one before we take a break and discuss more about sub-Saharan Africa. My last question on this point is about how long do you think the economic damage globally by the virus will last?
The impact is actually depends on how the injection that we are calling for happens. If it happens quite quickly within the next 9 months or so, we may actually recover by 2024 or thereabouts. If, however, nothing is done or very little is done, the impact is going to be felt, and there would be a lot of social dislocation. In fact, one of the dangers that we might see is the issue of sustainable development may actually go behind the curtain, so to speak, in some of those emerging markets.
Okay, so we're going to take a whole lot more of this conversation on board when we come back. Stand by, sir. When we return, we'll focus on the outlook for sub-Saharan Africa 1 year since the pandemic outbreak. Join us again, everyone. My guest, Bukar Kyari, former chairman of the Nigerian Economic Summit Group. Thank you, sir, for standing by. Let's continue this conversation with some of this data and news that we've gotten for you. Do you think African economies have gotten a fair share of the World Bank, IMF global interventions since about a year ago? $12 billion was announced in March last year as the first bunch of money by these institutions.
Well, considering the crisis in which we in Africa are in, based on the effects of the pandemic, even outside of the pandemic effect, we were all teetering towards some kind of economic decline, generally speaking, especially those that are highly dependent on oil and gas. Now, the effect of the pandemic basically exacerbated the situation, and for bringing it home, even though a lot has happened in terms of what the World Bank and IMF have done, I think more needs to be done. Now, the key thing about economic scarring that had been mentioned, it simply means that what the pandemic brought is such that, let's say, the farmer that produces goods in, I don't know, Jos or in Nasarawa is now connected to the consumers in Abuja or Lagos. Now, the pandemic actually dislocated that. And as a result, so the supplier and the demand forces have been dislocated. And that brings in what economic theorists call scarring. And the scarring will now have a negative or a vicious cycle of now stores reducing their manpower, and therefore the economy slows down. And so that cycle that basically continues. And that's what we have felt. And that's why food prices are so high. Of course, in the case of Nigeria, the food price increase may not necessarily be linked to just the pandemic alone, but the security situation in the north, which is more or less the bread basket of the country, is also affected by some additional factors that one would call the security element. But the security element may have actually been exacerbated by the economic downfall. So things are just quite messy when you think about it and bringing it down home. But in sub-Saharan Africa, as the report indicated, which actually is true, is that the bounce back is going to be felt more strongly and will happen quicker in countries that are not quite that drunk on oil. And any economy that is dependent on oil, such as Nigeria, Angola, etc., will actually have a much protracted and slow recovery, especially if not well managed.
Let me ask you this. When you look at some of what was talked about here in terms of the countries that seem to be outliers, Guinea, for example, Cote d'Ivoire, Niger Republic, these are names that 5, 10, 15 years ago wouldn't come among the front list or the top list of where you're talking about economies in West Africa, for example.
Indeed, other than Cote d'Ivoire, Guinea and Niger actually are what I would call they're starting on a smaller base. So Cote d'Ivoire might actually be considered among the top 10 economies or so of Africa. And therefore, the reason there is basically the less dependence on certain commodities, even though they do have the commodities that the world needs, whose prices have been affected, but the prices are bouncing back. But they also have an economy that they tried to manage. The pandemic did not quite hit them like some of the other economies, and therefore getting out fairly quickly is going to be possible for them, especially with that 1.5 billion or so dollars that they've raised using Eurobonds. And if additional structural inputs come into bear, then these few countries that you've mentioned are going to recover fairly quickly. For the rest of us, we just need to have good economic management and also reaching out to the international community.
A very quick one before we take the next break and move the conversation on. When you talk about countries less dependent on oil or oil minerals, the African Report magazine says they will either diversify or die. What's your take? Do you think your economy, if either you diversify or you die?
Exactly. I think in Nigeria, we need to bring it back to that realization that the relevance of oil and gas is gradually disappearing. I'm not saying that oil and gas will not be a factor, particularly for us, but we need to look for other means, and that other means is what the word diversification brings to bear. And rather than injecting additional capital, even the fact that we're trying to spend 1.5 billion in repairing a refinery that even at best will be suboptimal, why don't we invest in what I call infrastructure that would generate more in terms of a higher multiplier, such as education or health?
Kyari Bukar, you are bringing it all home to Nigeria, and that's Africa's largest economy. When the show returns, we'll talk more about that. Stand by, everyone. Welcome back to the program. The Nigerian authorities have been variously commended for the speed at which they responded to the COVID-19 pandemic, putting in place measures for stimulus to small businesses, business or debt rescheduling with banks, and cash transfers to some Nigerians. However, this huge economy of estimated 200 million people is in a weaker state today than it was just before the pandemic outbreak. Fiscal position is weaker, unemployment at record high, and a whole lot more. On the side of the World Bank and the IMF, Nigeria has been engaging both institutions actively since April last year. Now let's continue this conversation with Kyari Bukar, economist and former chairman of the NESG. Now let's go home on this, sir. 1 year on since the virus pandemic outbreak, what's your assessment of Nigeria's response?
No, the response to the crisis itself has been commendable, and the address by the Presidential Task Force and some of the things that have happened actually were quite commendable and far-reaching in its outlook. The earlier lockdown, as hard as and as harsh as it was, I think may have reduced the impact, especially in the population centers. However, I understand that there had been a blood test on random 10,000 people in some few cities and some few states, and the outcome is that potentially 25% to somewhere in the neighborhood of 15% of those population centers have had the antibodies to COVID-19. That suggests that the spread was not quite higher than what has been reported statistically speaking, meaning that majority of the population may have had asymptomatic responses to the virus. Now, on the economic front, actually some of the things that the central bank did, along with the banks in terms of forbearance and restructuring of certain loans, all of those actually helped. But now the problem is that we already had high inflation, high unemployment. If you can add the youth unemployment, it was extremely high.
That's the point, sir,
yeah.
to respectively caught in. So do you think the pandemic has made worse the underlying challenges of the local economy, like the scientists and others have said that if you have an underlying issues, you're likely more at risk from the virus itself? So do you think the virus has exposed a whole lot more about the weakness or the challenges of the Nigerian economy?
So that is the analogy for Nigeria as an economy or as an economic being, is that it already has the comorbidities of shock and of high unemployment, high inflation, depreciating currencies. I mean, name them, they were all trending in the downward direction. Now, the pandemic came in and it became a major catalyst. Now, according to some of the National Bureau of Statistics numbers, there were at least 20 million people that have stopped looking for jobs. That means that they've dropped off the economic data gathering aspect of things. And what that means is that we actually may be underreporting our unemployment rate. So our true unemployment rate might be much higher than what has been reported lately. And that requires a lot of expansionary boosting of the economy. Unfortunately, in an environment where inflation is already on the high side, if you do that, there is that danger of accelerating the inflationary growth. So you do it, you're damned. You don't do it, you're damned.
So, I mean, the government wants money in terms of funding, support from in terms of a whole lot of things. In terms of fiscal revenue, we know this is historically low, as the case may be. So in terms of funding support, the World Bank and the IMF and other agencies, including the AFDB, why is it that Nigeria has not been able to see higher steady flows? Do you think Nigeria is being snubbed or cleverly avoided, and why?
I don't know why. Maybe our economic managers need to actually assert themselves more and more, because, it's the case of the squeaky wheel gets the attention. I think we need to make a lot of noise in terms of what we need to do as a nation. And so our economic policymakers need to stress on that fact. In fact, this is even a situation where we need Mr. President himself to also lend his voice to the issue of the economy vis-a-vis those Bretton Woods institutions and also the international financial institutions, which look at the entire continent. And if you're looking at the entire continent, you have to pay attention to nearly 20% of the continent population-wise, concentrated in a very smaller percentage of the landmass. And you would not dare to provoke any social or political unrest in that part of or in that domain on the continent, because the repercussions are going to be, unimagined if anything horrible were to come to pass.
So we've tried to, we've approached the IMF. Last year, we got $3.4 billion approved from the IMF. Nigeria applied for $2.5 billion from the World Bank. Not yet okay. In fact, it's exactly a year ago that Nigeria asked the World Bank for $2.5 billion for budgetary support. That money is yet to come, at least as at the time we are having this interview. Another $1 billion from the AFDB was asked in April last year. Till now, the government of Nigeria is yet to receive a dime from the AFDB. In total, a year ago, April 2020, we requested for $7 billion. We only got 3.54 from the IMF, and the rest is still hanging. That's why my question was, why is it, does it look like countries like Egypt and others are getting funding very fast and furious from the World Bank and the IMF, while Nigeria is not getting same?
Bosun, you are touching me. You are actually provoking me. I had mentioned about the Egyptian economic response that took place somewhere in November 2016, when I shared that same thing in one of these broadcasts, and people did not pay much attention. Now Egypt is looking like a rose, and we are looking or smelling like goats. I mean, that's really a very sad situation. We could have done that earlier, and we would have stood out, and by now all our requests would have been entertained. I don't know why we haven't been able to get all that we've asked for, because technically speaking, some of the things that have been requested of us, we've gradually made moves, even though it is a shifting target, especially some of the things that the central bank governor had done lately. They were very harsh, but at the same time, they were medicine in one form or the other. And I think what we need to do is that there has to be a coordinated effort by our economic policymakers and indeed, the presidency itself to make those requests felt. And the IMF, if there are certain moves that need to be made by us, then we need to have that conversation with those institutions to ensure that we have what we want or what we need in place so that the economy can get a boost that would include inclusive, sustainable economic growth.
So we go back a little bit to that particular, the Africa Magazine report, which says it is time for West African economies to diversify or die. So Question: will the Nigerian economy die if it fails to diversify?
A Nigerian economy must diversify. Now, again, when you look at the breakdown of our GDP sector by sector, it looks diverse. The key point actually is that the tax base of those sectors is not quite the same, where the country's tax revenues is highly tilted towards the oil and gas sector rather than be broader. So I think what we need to do is that we look at our tax to GDP ratio, we look at our sectoral tax collections, and if we can actually, here is something counterintuitive, and that is that by reducing taxes, but increasing the penalties, what you would see is a more tax compliant society, such as what the Eastern European countries did after the breakup of the old Soviet Union. And essentially, you can have a single tax, simplified tax code that would start from with a low base, but at the same time, compliance increases. Guess what? Within a period of 2 years, our tax collections will be multiples of what we are doing right now. And I think that would be the beginning of the conversation in changing the dynamics of the economy. 2, investments in infrastructure. And I don't necessarily mean that government should build everything. It can be a PPP arrangement, but we definitely need some key catalytic infrastructural investments. Power, the rail networks, the road and waterways. And by the way, when I say infrastructure, I don't mean those hard stuff that we talk about. Education and healthcare can also be considered as infrastructural investments. Now, those 5 areas, if we were to even borrow and do it diligently, transparently, I think we can begin to harvest the diversification element of our economy. You know, everybody is now jumping towards fintech and all of that. I would not even bring those into the equations. Those are parts of services that would be helped it become a catalyst in digitization of the economy. Yeah.
We thank you so much for sharing your insights with us on the show this evening. Kyari Bukar, former chairman, Nigeria Economic Summit Group and chairman of Suno Assurance PLC. Thank you for your time despite the holidays.